want to show you guys how to interpret market structure and also how to interpret impulsive and corrective price action. Okay. Because essentially these things are fairly similar and there's quite a lot of overlap. So starting things off, just in terms of basic and raw market structure, we define an uptrending market by a series of higher highs and higher lows. Okay, so but essentially what this is an impulsive move and then a corrective move, an impulsive move and a corrective move followed by another impulsive move, right? So although we are looking at a higher high and higher low sequence, I think a big thing that a lot of people forget to mention is how price is actually behaving, right? Because if we see an impulsive move to the upside, we certainly want to see a corrective pullback indicating that the sellers are quite weak, right? Because this would indicate that the buyers are strong due to this impulsive move, and then also the pullback, which is corrective, would indicate that the sellers are weak. Okay, so that's an uptrending market. We have a series of higher highs and higher lows. After an impulse, we want to see a correction, and then we want to look for another impulse. Okay, another rule of thumb, is once we have created our higher low. So for example, once we make this higher high here, this now becomes our most recent higher low. And as long as we are maintaining above this higher low, then we are still in an uptrending market. We still have bullish market structure. Similarly, when we push and make a new higher high, therefore this is our higher low here. And as long as price maintains above this higher low, we are still in bullish market structure. We still are in an uptrending market, okay? The next one that I want to cover here is just simply a downtrending market, which is just the opposite of an uptrending market. So we have a lower low, we have a pullback, and then once we impulse down and make a lower low, this then becomes the most recent lower high. And so we have an impulse, then we want to see a correction. We have an impulse, we want to see a correction, we have an impulse. Okay, so once we make a new lower low, this will become the new lower high, so we have to maintain this market structure. Then we make a new lower low, so we have to maintain below this lower high here in order to maintain bearish market structure. Okay, so that's a uptrending market and a downtrending market. And the next thing is a ranging market. So this is simply where price is stuck between 2 points. So essentially we have a upper and lower bound here, and there's no clear sign of any trend within this ranging market, right? Because we have no series of higher highs or lower lows, right? So now that we understand the three phases of a market, and we also have some prior understanding of impulsive and corrective price action, I'm now just going to take you guys to the chart here. Okay, so I'm just going to remove these drawings here. And what we can see here is, so I'm just going to categorize the chart for you guys. So here we have a ranging market, right? This is the third thing that we discussed. You can see price is just ranging inside here. Therefore, if you're trading a trend following strategy, you don't want to be taking trades within this range, right? And so once we see a ranging market, we can just mark on our high and low. And then what we see here is an impulsive move to the downside, creating a lower low, right? So what we just spoke about, once we get the lower low, this around this area here is our lower high, so we have to maintain below here. We have a lower low. After we see an impulsive move to the downside, what we want to see is a correction. So you want to see price slowly correcting back to the upside. So you can see here we are slowly correcting up. then we have another impulsive move to the downside. Okay, so once we set new lows, our most recent lower high is here, so we have to maintain below this level in order to maintain a seller's market, right? In order to maintain a downtrend. Then let's just clear this up so you guys can see. So you can look at how price is moving, right? This is very impulsive to the downside. This is very impulsive to the downside, right? So understand sellers are in control. Then we see price correcting back up slowly. So we have a impulse, then we have a correction. So we're anticipating another leg to the downside, right? We're anticipating another lower low. Now we have another lower low. This is the most recent lower high. So as long as we maintain below this lower high, we can then look for another correction and then another continuation. Okay, so that's essentially how the markets work. We are either ranging like this, or we are impulsively moving, then we are correcting, then we're impulsively moving, then we are correcting, right? So that's how markets work in a nutshell. I just wanted to cover some basic concepts to start with, and then I'm going to go into a lot more detail shortly in the upcoming videos. But yeah, that's basically how markets work. We're either correctively ranging, or we are impulsively moving to the downside, and then we'd look for a correction, impulsively moving to the downside, correction, etc., right? And vice versa with the upside. Okay, so just using naked price action, you can understand a lot about markets and sort of how they work. So yeah, that's it for this, guys. For this video, guys. If you did like this video, please like, comment, and subscribe. I will be responding to all comments below. So yeah, I'll see you guys in the next video.